All right. Good morning, everybody. So, Bank of Japan yesterday sent out a presser that they were going to perhaps not defend their yields at that 0.5%, right? That's been their default go-to, is maintaining yield control. And when they sent that presser out, the 10-year went nuts, and we got the market that we had yesterday, which was pretty awesome. It didn't seem to last, though. We can see the 10-year is continuing to move violently, just perhaps not to the upside. Rejected off that quarterly level and starting to pull back down. And with that, we got equities popping back up again. So on the table for today, we got PCE, personal consumption. This is showing as a bright red bar, likely to be impactful. Later in the day, we got consumer sentiment index, and we have additional auctions, and then the rig counts. Now, I worked on those rigs, and we don't change the rig count very often. It would be something pretty extreme, like say a new fleet of rigs was to come out and they have to do a recall and all those rigs get shut down all at once. That would be pretty much the only thing that would take all those rigs offline really fast without knowing in advance that they were going to go offline. Looking at what's going on around the world, Hong Kong still running that stimulus. US markets are they're not too bad. They're sitting in the green. Europe's looking really good. Remember, today was the ECB's rate decision, and tomorrow is the Bank of Japan's rate decision, or tonight, right? However you want to look at it. It's interesting to think about how this played out, right? Yesterday, we went into the close down on the day, and when we're thinking about global events and how we got here this morning, usually at the end of our trading day, whatever we had, bullish or bearish, will seep out into the rest of the world's markets as they open up. And that's not what we see here at all. Australia kind of kicks everything off. Then the Asian markets come online, and then Europe comes online, and then it's back to us again. And the Asian markets, or at least the Hong Kong markets, are up significantly. So, they're just sitting over there doing their own thing, not paying attention to anything else. And Japan is such a big unknown right now that it is galvanizing everybody, right? It's got all the attention because we just don't know what they're going to do. I think maybe they don't know what they're going to do. It's just such a, I can't pronounce the guy's name, but their new governor has inherited this mess, and now he's got to try to figure out how to fix it. We are in blackout. We are no longer in blackout mode. So I wouldn't be surprised if we start seeing Fed officials begin to pop back up again in the news. Remember, they're trying to stick to a clear message. And what Powell offered this week was that they're no longer going to offer such forward guidance like they have been, right? They've been telling us well in advance, we're going to hike here, we're not going to hike there, we're going to skip, that's gone. Now they're going to hold that closer to the vest and let us know when we get into a new FOMC meeting whether or not they're going to hike. That gives them a chance to do a pause whenever they want, and it can be more, someone used the phrase stealthy. I don't know if it's quite like that, but either way, it's stealthy, subtle, call it what you want. They can slip a pause in now and then without having to announce some big make some big deal out of it. So we want to hear more about that, right? Hopefully we're going to see more Fed officials out talking, and the key is to listen for the things they say in common, right? Each one wants to stand out and say their own thing, but they all have to sing from the same hymn book. And that's what we want to hear, is what's their consistent message now? This is the 5-day options flow. It's across all of the markets, not just picking one market. The white line is SPY, but if we were to take SPY out of there, it really is for all markets that have options, US market. And what we're looking at is a red-green cross. Now this is 5 days, looking back over the last 5 days. So if we knock that down to say 4 days, well, it didn't really change that much. 3, still have a crossover. 2, and 1. And the reason you want to do that is if you look at just a snapshot of 1 day's options and you see a cross like that, it can just imply a single day's 0 DTE kind of trade activity. But if you start backing out, or in this case, I brought it forward, then you can look at the bigger picture and see if that crossover, has been coming through all of the data that we've got. And yeah, it's a good sized crossover. This does not say short the market. It just shows that more puts were being traded than calls, right? It's net flow. It's the premiums. So put premium versus call premium. Yeah. Good morning, Bubba. I said good morning. You're salty this morning. (8:30, 10:30, and slightly maybe 1 o'clock, right? That recount at 1. The volume's a little heavier than I would have anticipated, and yet it's not in a dangerous area, right? So 124, it's not bad. If we were to come in and see 180s, 190s, certainly into the 200s, that would be pretty big. We'd want to go looking around at what is causing it. And if it was really low, say below 70, we'd want to know why. Why are they sitting out? What are they waiting for? It's important to note that there is a market maker move this morning that implies hedging activity in the front end of the options. Right now we're inside day, and the day is pretty wide. We're also back inside the weekly range. So we got outside the box, came right back in again. We are looking at a weekly chart here on the right. It's important to notice all those wicks across the top, right? Took out those wicks, had a new set, took those out. Now we got a new set. If we were using OCO or OCR, we've got higher highs and higher lows, and we've got higher close. So the trend is still intact. It's a difficult trend for sure, but the trend is still intact. We're also still significantly higher than the 10-period moving average. The 10 and the 20 and the 50 and the 200 are all fanned out nicely like a fork. We've got a nice angle to the chart. The wicks just show that there is still a lot of trading going on the other direction. How much more big positions are up there, right? And are they done yet? I would say they're not done yet. If they were, we would have made it through that zone. 10-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We are right at the point of control. It's interesting to note where we turned around yesterday, and it didn't hit it spot on perfectly. But 44.50 was the turnaround spot. We just overshot it a little bit, right? It's the same thing. And we went through the shallow area relatively quick. And if you don't quite remember, when we made these lows, we had talked about how there really wasn't anything there to hit. Just like there wasn't really anything back here to hit. So in that shallow area, it shouldn't have stopped in the middle of the shallow area. It should have gone all the way through it. It's like jumping off a roof and then stopping halfway and deciding, never mind, I'm gonna go back up again. Got to find a place to turn around. So this time we did make it all the way through the shallow area and we hit a price shelf below. But again, we didn't drive through it with orders. They took a front run on it and just turned it around. Liquidity resides on the other side of the pivot. I'm sure you've heard that before somewhere. Volume by time and volume by price are nearly aligned in their point of control. And so far, we really don't have any surprises. Since that low held, as we get into the new week, as say towards the end of Monday, 45.50 is going to be the low of this profile. That'll be a pretty tight profile, 45.50 up to 46.30, about an 80-point profile. It's not too bad. Five-day, 5-minute volume profile. The point of control that I had copied and thrown on yesterday, I wasn't really careful about where its starting point was, right? Normally I would bring it and start it in that day, but it was from here. We ran through it yesterday like it wasn't even there. Like the price didn't respond to that level even marginally in this move to the downside. The good thing about this move to the downside yesterday is we knew exactly why it was going on, and we were able to just jump on it with both feet and hammer it the whole way. You gotta love it when you got that sort of conviction. Take it while the taking is good, right? All good things come to an end. We wouldn't want it to keep going, keep going to the downside. We don't have a point of control, or excuse me, we do have a point of control from yesterday, but it is a long ways off. $46.22. Yesterday, we paused on the ADR half. Really nice. I had some screenshots of it, but I didn't prepare them this morning to show them. So, but these ADR levels, I mean, they're not support and resistance, right? But it is interesting when price comes right down to that level and stops dead on it, and then just grinds away down there and building a base on that level. This morning, the range is fairly muted, I would say, right? We got a 21-day ADR at 0.87%. That's about $40. The market maker move this morning, I'm going to round down a little bit, is $15. So 40 and 15, it's $55. This range, I mean, after the move from yesterday, seems really small in comparison. Let's go ahead and price in what that move looks like. It gets us up to the voodoo line, 46.81. That's a little extreme, to be sure. What I did is I went to the biggest, the worst one, how far it could be right off the top. Normally what you would see me do and what I'm about to do now is you take the full ADR from the yellow line and just add that market maker move to it, about 16 and a half, call it $17. Right? And if we do that, it gets us pretty close to yesterday's RTH open. It's really nice. So even with the market maker move and the ADR and everything, the measured move is still within yesterday's range. We wouldn't even get to the high of yesterday. What I measured that put us up to this snow lineup or this forest voodoo line up here was to calculate it to its most extreme. If we were just to get all crazy and wild bullish today, how far could we go? Well, let's take that in the other direction too, right? Because we don't want to carry a bias. Yeah, 45.60. It's another voodoo line. 44.60, excuse me, not 45. So now we've got our range on each side. You can see the 10-day moving average, how we came down and interacted with that level yesterday. So what I've got here is I'm plotting the 10-day moving average on this 15-minute chart. That's what these blue lines are here. So you can see how price was staying above the 10, started to slow down. We were losing a little bit of that momentum. And then finally we came down and we interacted with the 10 yesterday, 10 DEMA. It's a 10-day exponential moving average. We've already moved away from that 10 again, and we are close to a 0.5%. So we can see here how we came down and we got to the 10. Call it a little bit of a reset, right? Because we had the same thing there, same thing there. This isn't a smooth image, but it does represent a bit of that wave form, right? And of course, the market can wave sideways, but it can also wave higher. So we got our reset. We could very easily move 1 or even 2.5% away from that 10-day moving average to the upside because we are not overbought. Now that's for the daily. And remember on the weekly, we were overbought. On the weekly, we needed a pullback, right? That was the general consensus earlier in the week is we got a little too extended from the 10-week moving average. And we can see how the downward slope is continuing, right? We're working our way back towards that 10-week, and we're doing it in a nice controlled manner. It's not like one of these where it was just a cliff and we dropped from 3.5% all the way down to, minus 1%, that we went above to below in a heartbeat. It's just a nice, clean, controlled, easy sell-off. So hopefully everybody didn't get all bared up yesterday and put on long-term short swings, because that's not on the table yet. It's interesting that we didn't get the move through the kill zone. The move actually started at midnight. But I think that probably ties in with something else that was going on globally. And so there just wasn't a kill zone move. if you're new to this and you haven't heard me say that before, the kill zone is a window of time between 2 and 4 a.m. that has been flagged as where price moves the most in a 2-hour period within the entire trading day, more than from 9 to 11 or from 2 to 4, right? Say from the open at RTH open, 9:30 to 11:30, or from 2 to 4 at the end of the day through power hour. This window of time between 2 and 4 has bigger moves than either of those statistically and consistently. But who wants to get up at, 2 in the morning and trade that window? Not me. I like sleep. I continue to call out and take pictures of this cumulative tick through the day. So it helps once in a while to point out when we have really great signals, what those signals are and what we're looking for, or the lack of, right? That green line is supposed to lead. So yesterday when we had all of these pointing to the downside and it was the purple line crossover and the purple line leader, it was, a general consensus that, okay, yeah, we're headed to the downside. Nothing argues that, but it would have been a higher conviction play if the green line was leading the way to the downside. And if the green line had been the crossover product to begin with that started the lead to the downside. So the signal was still there. It was a good clean fork. They were all pointing in the same direction. They got out of that Twizzler phase where they're all tangled up and started to spread out really nice. That's exactly what we want to see. It would have been better if the green line was on the bottom leading them down. I've got articles on that product, by the way. Wrote them there on my blog. It's worth kind of getting an idea of snapshot in time, how to use that thing. If you look at market breadth yesterday, the NASDAQ's market breadth, this is the advancing versus the declining issues in the NASDAQ. It maintained its positive state through most of the day, and only after 2 o'clock did it finally cross below zero. Now that didn't matter in the grand scheme of things, right? But everything was really bullish in the NASDAQ, looking at all those tech and junior tech and, just that space. Look at the breadth in that thing. Now, straight above that, we've got the NY Fang. That thing, it usually gaps up just like what we see, or gaps down. It doesn't, it's a gappy bugger at the open. So it almost always has this really wide 5-minute bar. And it spent most of the day just chewing through that 5-minute bar, working its way back down. When it finally got to the bottom, we had a little bit of a takeout. We closed below, but really not that bad, because in the grand scheme of things, this thing closed inside of yesterday's range. That's the NY Fang. I bring that up because, if we're thinking about indexes, oh, come on, you can do it. Look at where we're at with the NY Fang. I mean, that is a beautiful trend. And sure, I mean, it's flattening out a little bit, but we haven't even touched that 10-week. All the moving averages are fanned out really nice. This is a little soft, but it was a little soft here. Had a nice springboard off that 10-week, and away we went. This thing is primed for another leg up. It doesn't have to go another leg up, right? But instead of assuming that it's going to turn back, we assume that what it is doing is what it's going to continue to do. Trade what we have, not what we think we're going to get, right? So in all of that yesterday, at the end of the day, we closed inside the previous day's range. So yesterday wasn't a burn the house down kind of day. And then for regional banks, they stayed underneath that VWAP through most of the day. Just a nice, clean, beautiful short. And for the S&P, which is what we're looking at down here, the advancing minus the declining issues in the S&P. I mean, it got pretty close to zero around lunchtime. And then again, and finally crossed through at about 130. You see the weighted AD stayed below the 0 all day, with the cyan leading the way. It didn't get too overextended, which would be a concern. So, you're using that thing and the cyan line really starts to run away, gets like way out here. That's usually a warning. Or if it stays buried inside the histogram and it's, shy and it doesn't want to come out, that's a warning. It was also really nice in those ticks yesterday. Those ticks, when we cross down below -1,000, will warn you, hey, we're about to pause. It is a leading indicator in that sense, because the pause hasn't happened yet, and it's telling you, heads up, we're about to pause. And tell me that's not useful, especially when you're trading options in something like the SPX, where, in 2 seconds, you can lose $200 on that option because just in a blink of an eye, poof. So what I'm doing here is I'm going into the SPX, and we can synchronize with my mouse to where that drop was and where the pause was, just to kind of emphasize that this thing is a leading warning. It doesn't warn you after the fact, because what the heck kind of warning is that, right? So right here is where we crossed below the 1,000, and the warning was, hey, we're about to pause. And that was at 2:09, and at 2:13, there's the pause. And you can think, well, okay, that's a coincidence, maybe one time. Here again, we tagged -1,000, warning, we're about to pause. And the very next candle, we paused. Just a coincidence though, right? Same thing again. The pause warning this time came a little late because we were already basing at that point, but pause warning came, I guess you could argue on either one of those two candles to be I'll take the hammer. 2 minutes later, we got that pause from the move. I don't like that one so much, but those other examples, classic examples of why we want to use the tick. Just keep an eye on it through the day, because on a day like this, when we're just steadily marching in a single direction and it starts to pick up speed and we're expanding nicely, it's got to pause, right? We want it to pause so it's healthy. And we want to identify where those pullbacks are going to be. And when it lines up with a pivot point, it doesn't have to be the voodoo line. So you're coming into a pivot point, and then this says, hey, we're going to pause. Come on, right? Does it get any better than that? I don't think it gets any better than that. That's pretty darn good. So it's just the tick, right? It's nothing fancy or anything like that. I just took the tick and I turned it into a line chart. So $ TICK. I took this and made it look like that. That's it. Thinkorswim is a little laggy today. Wake up, punk. I went ahead and built a couple of ETF because I really don't like some of the ETFs that we use. So this ETF that I built here, we've got one for the China ADRs. I mean, don't get me wrong, KWeb is fine, but there's really only a couple of those that I really want to keep my eye on. And KWeb doesn't, I mean, it's China internet stock, right? Not China ADRs in general. So I made my own little version. Those are up, by the way, this morning. JD, PDD, Neo, Baidu, Baba. They're up 3 1/4, a little more. Lee, Neo, Nikola, Rivian, my EV ETF is up 2% this morning. The chip space, AMD, Intel, MU, NVIDIA, They're up more than 1% this morning. Then we got the pot stocks. They're up 0.5% this morning. And we're starting to see a little bit of a turnaround in transportations, or at least the airlines, after that massive debacle yesterday. So they're up a fractional amount this morning, a little more than 1/10, but they're working on it, right? So a little bit is better than nothing. I might have to knock one of those out. I think that when I was working through this thing yesterday, I think one of these, I think it was JetBlue, was interfering with things. All right. Nope, wasn't JetBlue. Yeah. Anyways, you got to love Thinkorswim for that, right? The ability to make your own ETFs. Yeah, there we go. So we can see that they're up just slightly this morning, not very much. You can make ETFs on anything, including, say, your holdings, which is pretty cool. I didn't stick them in the quotes tab because I didn't want them to get buried and get lost, right? I do have a FANG list already in here. It's just one FANG list in here. But, you know, other than that one, and you can apply weighting to it too, right? If you want to, you know, weigh them by their market cap or whatever. So right now, the one that is leading the list is the China ADRs. Guess we can start with that. We can see KWEB is up nearly 4.5% this morning. And we've seen, remember when we started all this, looking at the global indices, that the Hong Kong was up the most globally. Look at that move in BABA this morning. Yeah. We're going to hit that 100. We're getting close enough to it now, 98.30. I mean, unless we dump right back down again this morning, we're going to 100. We've got a market maker move of 0.94. I mean, this thing is it's ready to go, right? I was just about to say a phrase that reminded me. One of the Eagles members died. That news came out this morning. And no, not sports team, the music group. So Baidu up as well this morning. Nice gap up in this thing. We are right around that 153. So we're inside week breakout this morning. We're sitting all the way up here. We've got a weekly level that needs to close. Let's see if that gap is closed yet. Oh, okay, never mind. We already closed it. But we're above that level this morning. 152.6 is a good line in the sand. I would say if we drop back down below that, that'd be your warning alert. And then if we get back inside of yesterday's price action, that would be your trigger to get out, right? If you're long in that thing from yesterday. I'd also be very cautious this morning. Speaking of being long in it from yesterday, think about all those trapped traders that were buying right up until the moment that this thing flipped over and dumped. You know, there's a lot of bag holders in that thing that are going to be very excited to get out today. So be prepared for that if you're trying to take these long, that, you know, there's very well going to be a lot of newer traders that just knee jerk react, bail out of it, happy to be, you know, get out without getting hurt. And then, of course, they're just going to miss the run on the other side. It doesn't owe us a run, by the way. But those China ADRs are absolutely still they're still going, right? This is not done. We can continue to see the stimulus coming out of China. And it's where the money is. So follow the money. All right, those were the leaders. Behind that, we've got those EV markets. I mean, look at that beautiful chart. That's the weekly chart. Li Auto. Yeah, that just looks really good. We do have a market maker move of 1.3. So a little bit of something to be concerned about. And it's got an average daily range of more than 3%. So, 3% and 4%, 4.5%. This thing could easily make a 4.5% move. On top of what it's already made, which is a 5% move. So that's Lee. We got Neo here, back above that 50-week. I'm going to put a little more time on there. So yeah, I really like this. We are coming up into an area of concern around that 14. That's where we're getting hung up right now, right? 14.13 is yesterday's high, 14.17. Now, the one argument about all of these is if you're trying to day trade them, you're in a bad spot, right? They're already up 3, 4, 5% this morning in the pre-market. It's a big, massive gap, and it never feels good trying to buy something that's already up that far. If you're looking at a swing, okay, these daily, weekly, and monthly charts don't look so bad. There's a lot of reason to believe that there's room left for a swing. But from a day trade perspective, it's just not going to feel good trying to buy at these levels. So you could try to say measure yesterday's levels and focus on the pivot points, looking for some kind of proof that it's going to stabilize and it's bouncing. We're going to use the RTH and not that Globex. So RTH high yesterday, $21. If we do fade down and bounce on yesterday's high, that'd be a good solid place to bounce. If we do break through that level, measure the entire range of yesterday and break it into 50%. And that gets you 20.5. No reason to split hairs, right? 20.5 is fine. And it's not just for this one. That's for a lot of things this morning that are going to be gapped up. Nobody wants to buy a market that's gapped up like that. So day trading is going to be a little bit of a pickle unless you find things that went red to green, that start this morning red and flip to green. But for the EVs, Lee, Neo, Nikola, Rivian, Tesla, XPEV. But sometimes Tesla kind of does its own thing. So take a peek at that. Yeah, okay, we got a little bit of juice out of Tesla, but nothing compared to those China ADRs, right? I mean, that is nothing compared to what those were doing. And it already seems like it's fading down, right? So the algos will pop that thing up first thing in the morning, and now it's just fading, but be careful because it looks like we could reset soon. So what's the reset? Back down to the bottom of that open candle. And it doesn't have to be perfect. It can just come close to it and call it quits, right? They'll front run it and away we go. If we get below that low, then we're very likely going to come back down here and close the gap. It's not the kind of gap that we want though, right? That's an after hours. It would be much better if we close the gap from the RTH. Still, it's one level at a time. Oh, TrendSpider got ICT order blocks. The email came out yesterday and they were saying, hey, come put on our new indicator. That's pretty cool, right? Add that to their raindrop charts. Yeah, I like it on the daily and the weekly. All right, so US dollar Japan calmed down. The 10-year is calming down. That quarterly level was a beast and it just smacked it down. And the dollar really struggled with that monthly 101.78 and it's on its way back down. So remember, it's not just whether they're going up or down, it's also how fast they're moving up and down. So we don't want to see these things make big, extreme, exaggerated moves. We want to see slow and steady, nice and easy. And no movement at all would be just fine. There would be nothing wrong with that. If it doesn't move, then it isn't putting any pressure on the market up or down. If it continues to fade, we should continue to see the S&P and the NASDAQ drive higher, right? It really is as simple as that. It should drive higher, trying to reclaim what it lost. All right, 13% of the S&P is up 1% this morning. And the industry are semiconductors and technology services mostly. One odd retail and one finance, but it's all, electronic technology through semiconductors and internet services, ASAS, however you say it. I know I'm butchering it, but it's counting Google twice, so throw one of those out. Meta, there's a little bit of that rebound from its earnings. Amazon is still, that's my go-to, right? That's my baby. So here we got the 10-day. You can see how we had that cross down yesterday, but the 10-week in Amazon, we bounced on it this week. We've come up off of it. And this morning in the pre-market, as you can see already, because it says pre-market right there, we're up all the way up here, basically where the week opened. So we're looking to get through that. And anybody who's been in my coaching that knows when we talk about that tail and the flip, that if you don't catch the tail, right, you try to catch it when it comes back through the open. Yeah. So we'll see. I didn't like that 2-bar reversal, but it's a work in progress. This has got a lot to do, right? When we kind of zoom out and look at it from the big picture, 2021, the highs there and into 2022. So, a lot of work. So that's the S&P at 1%. 33% of the S&P is up 0.5%. Semiconductors, movies, entertainment, banks. It's just a hodgepodge mix of junk. Nothing really standing out that bad, which is not a bad thing. Apple's up a little bit this morning. What? All right, 2 attempts at a breakout in Apple so far have failed. It's trying again this morning to break out, but now it's got levels above it that it built on those fake breakouts that it now has to try again. We're just going to measure the week's candle so we can see where that 50% mark is. And we're above it. 50% of the candle is 194.88, and we're at 194.95 this morning. So we are getting back above the 50% mark, but we're still in this wider bar, right? So we're still IX10 from all the way back here. Yeah, it's like we talked about before. You can wait for the signal and you will win more often. But when you lose, it will hurt more because you had to use a wider stop. Or you can get in before you have all of the signals and you will lose more frequently, but your losses are smaller because you had an LRE, right? Low risk entry. So, going long yesterday when we were at those lows, when you had no signal to go long from those lows, would have been a better choice than waiting for it to say open this morning and rally and break out from up here. Because if you think about where your stop belongs, having a very small stop would be better than having a really big stop, except you just didn't have any signal to go long. Not a valid signal anyways, right? It's not right or wrong. It's just whichever way you want to do it. And if you suck at money management, an LRE isn't an LRE for you. You're just going to screw it up and make it a big loss anyways. So don't do those. Just do the ones that give you the confirmed signal and trade that way. Yeah. All right, NASDAQ. 48% of the NASDAQ is up this morning, 0.5%. So when we said that tech and junior tech is up this morning in the pre-market, yeah, right? Yeah. So semiconductors take up the broadest sector here. And then we got packaged software behind that. A little bit of motor vehicles with Lucid and Tesla. Some internet retail. I see those China ADRs in there. JD, PDD, Amazon is also in there, eBay. So interesting that we didn't see like Shop or one of those. Communications is still hot. So we're seeing Comcast. Where's Disney? Did I miss it? Nope. A lot of junior tech and tech though. Semis are hot today. With that in mind, there is this little baby semiconductor name. Oh, and that thing is not hot this morning. That thing is getting murdered. So GSIT, but no, that never mind. That doesn't look good. Not playing with its peers. And then 36% of the NASDAQ is up more than 1% this morning. So it's not too bad. It's reasonably bullish out there. For We're looking at the S&P 500 narrowed to 100 names by market cap, because I really just want to look at the S&P 100, but they don't offer me the S&P 100, so I have to filter it. My benchmark is 0.5%. This thing stays gray until something has moved 0.5%. So if it's moved more than 0.5% up or down, then it'll start to turn green or red. Green on the screen with a lot of gray. We can see where there's not a lot of interest. These financials, they're not negative really, but they're just not all that positive, other than the two sisters, JP Morgan and Bank of America. I'm surprised that Wells Fargo isn't playing along with the group. But commercial services, I mean, Visa, MasterCard, PayPal, all three of those looking pretty good. PayPal leading the group. PayPal had that $75 weekly level that it was fighting with yesterday. Let's circle back to PayPal. We got a gap that still needs to be closed. Let's check over here first. None of those. $75.52 is a gap to close. And this morning, we're up about 75 cents from the low and the close of yesterday. Yeah, that is kind of hard to see, isn't it? Those labels weren't designed for that blue chart. So we broke through the 10-period daily moving average yesterday. We've crossed back up again through it this morning. On the weekly, we're still underneath that 50, but we are above the 10 and the 20, which hasn't crossed yet. So a longer term swing is still a threat. It's not a good solid swing long until those two crossed back over again. And just because they cross, it can't just be like, oh, well, they crossed, so now I'm going to trade it. Because look, they crossed there and that didn't fix anything, right? And they crossed back here and that didn't fix anything. So it's got a lot of work to do. That 50 is still the number one thing that we have to deal with, $77. For your bigger long-term swing, you don't have a solid confirmation yet. But again, like we talked about earlier, there's getting in before it's confirmed and getting in after it's confirmed. But still, PayPal leading the way this morning in that group. MasterCard and Visa backing it up. Amazon all by itself in retail. We don't have much out of Walmart, Costco, Lowe's, the rest of those. Pepsi's been on like a railroad track. And it's up again this morning. I mean, look at that weekly chart, huh? He's pretty. So this morning, we're getting a rebound from that big drop. The thing is, you know, big picture with this, that big drop is not very, that's not very good. What you want to be watching for on a lot of these is if they can get back above the 50% mark from yesterday. That's going to be the tell or the line in the sand. Those China ADRs, they already did, right? I can't even stress how bullish that is to have this big of a drop and then to flip around and run all the way up and open above the entire drop from yesterday. That is really bullish. So Baidu closed at 148 yesterday, basically on the round number, and it's this morning it's at 152 60 or 152.95. That's the bid and the ask up here. Either way, it's above that white line that I just drew up there. So that's really bullish to close down here and open way up here. It doesn't mean that it's going to be a nice follow through perfect, right? We had the same thing here where we closed down here and we opened up here. And sure, I mean, the next day we ran a little bit, but not like some wild runaway out of control market. It's just the size of the move to the downside yesterday. And then the recovery today. All right, so I kind of like this setup in JD. It's not a TRB exactly, but we closed near the low of this. Well, we closed here in the lower half of that candle. And this morning we're at 39.50. So we're just about ready to break out of that candle, the 725 candle. That'll put us into that gap close. So we'll magnet to that 39.87. And if we can get above it and close above it, start using that for proof of support, right? Get above that $40 level. We can start working our way towards 44. We have everything except the Bitcoin stuff. No, I thought I did a Bitcoin list, but I guess I didn't. I'll fix it tomorrow. For today, we can use something like BITO, or we can look at, Bitcoin futures. It's not the idea that we necessarily want to trade Bitcoin, right? But Bitcoin and the NASDAQ have been running like a 60 and a 70% positive correlation. So we see bullish flows in Bitcoin. We can assume there's going to be bullish flows, in tech, as if we didn't already know tech was moving this morning. But we want to see if it's everywhere. It's in semiconductors, it's in the financials, it's in retail and shopping and shipping. It's in the EV markets, everything that we've looked at, right? Everywhere that we look. And then the more oddball stuff, like transportations up this morning, pot stocks, and the China internet stocks, and now Bitcoin stuff. So we can see Riot, Coin, Mara, everything looking really good for a recovery. The thing is with those that I just mentioned, like Bitcoin proxies, that 50% line in the sand of yesterday's down day, unlike the China ADRs, which have already recovered and are way above it, Mara, Riot, Coin, all of those, they're not even to the 50% mark yet, which means they could very easily continue this move to the downside, and that all we're seeing is a rally into resistance before coming down and falling lower. That's the phrase, right? Bounce on support, a rally back into resistance before continuing the move lower. So we want to be a little cautious of that move this morning. They do have a market maker move. It seems like everything that we looked at today had a market maker move on it. And it makes sense, right? There's a lot of hedging going on. Meta is back up to 315, but still that line in the sand is very clear. Let's put a different line in the sand there. All right. So that's yesterday's 50% mark, 317.6, and we're at 315.85. So it needs to get above that. And the concern is that we're just rallying up. We're going to hit our head on that. We're going to come back down. With that in mind, the out of the money puts at say 300 are probably going to be pretty cheap. I don't think it's going to be that weak, right? But if you're looking for like a cheap or a cheaper play, I mean, 21 days out, there's still $500. That ain't so cheap. What else you got? $2 7 days out. I want to go 7 days out. I want to go farther than that. So let's just, stick at the August 18's 300 strike, but we turned it into a debit spread. Yeah, I mean, you're looking at 75 cents. Do I really think we're going to go that far? No, but I don't think we have to either. All we have to do is start moving in that direction very fast, and this will begin to monetize. Now, if you want to, you could just run like synthetic stock, right? And just put it, in the money. You're always going to have a threat if you do that, but you have a threat anyways, right? As soon as you have a short option on there. But you could do it that way. I don't like it in something like Meta, equities where there's actually shares, but you do that in say an index, the SPX, there's nothing to assign you, or the XSP. Still $75, 300 and the 297.5. You're risking about 75 cents to make 175. You won't make 175, but you don't have to lose the full 75 either. Just cut both of those numbers in half. You're risking about 40 cents. We'll just, give a little there to make, say, 80 cents. It's not bad. 2 to 1. And it is worth noting on the weekly chart that that Meta is not bearish, right? Big picture, it's not. So that's what I got for you guys. You got a buffet of choices, right? Just about everything out there that has good options flow is getting some moves today. Even X Steel is up this morning, right? Nice bid in that. So XME, metals and mining, this thing's not showing any liquidity this morning. Maybe I'll build one of those as an ETF too. But copper, steel, precious metals, gold, silver, everything is catching a little bit of a bid this morning. And they've got a lot of work to do, right? So the main thing at this point is going to be that 50% mark. If it's going to reject and continue the move to the downside, that would be the perfect spot to do it. Everybody be careful, be safe, have a good day, and I'll see you all tomorrow.